América Latina, Milliman. El panel será moderado por Jesús Martínez, Vicepresidente AMIS. Adelante, Jesús.
Buenas tardes, gracias por estar con nosotros el día de hoy. Es un privilegio para mí estar en un panel con compañeros de tan alto nivel y expertos en el campo. Nos acompañan especialistas internacionales en la industria de seguros para analizar importante en la gente, en la sociedad, compañías y economía global. La industria de seguro está sufriendo. Se han implementado diferentes iniciativas para dar una respuesta efectiva para el efecto de esta pandemia. A medida que se recupere la economía de la pandemia, las compañías aseguradoras van a enfrentar un número de retos, pero también habrá nuevas oportunidades a medio y largo plazo. La magnitud del impacto de la pandemia ha expuesto deficiencias en resiliencia y en prontitud de nuestra sociedad para ser resilientes con un riesgo. La resiliencia nos ha demostrado que es difícil cuantificar los impactos que han tenido que ser cubiertos por la industria aseguradora global. Y sabemos que quizá esto se lleve muy buena parte de todos los activos y las cantidades de las compañías aseguradoras. La industria global aseguradora tiene que estar preparada para enfrentar una segunda ola de la pandemia con un segundo periodo, y las compañías tienen que tener una cobertura más flexible y un mejor manejo, aumentar la resiliencia a nivel global y llevar a cabo las medidas para evitar ciberriesgos. A largo plazo, la industria tiene que tener resiliencia e implementar acciones para dar soporte y mitigar al impacto de un riesgo futuro. En este panel vamos a comenzar con 3 secciones. Primero, la respuesta de la compañía aseguradora. Keith, en tu opinión, ¿cómo calificarías la respuesta de la industria aseguradora a nivel mundial y las autoridades regulatorias? Muy bien, gracias. La principal pregunta en la que nos tenemos que centrar es ¿qué tan preparadas estaban las aseguradoras para enfrentar la crisis de COVID-19? ¿Estaban listos para pagos? La industria parece que es muy resiliente. Hemos conducido algunos estudios de escala internacional y estamos valorando aquellas medidas valiosas que se han llevado a cabo. Y estamos hablando de un 20% de buenos puntos y es menos del 10% de vulnerabilidades. Ahora, viendo la solidez financiera, se ha detectado que no se puede negar que ha dañado a muchas industrias. Y aquí podemos ver que tiene que haber medidas de mitigación importantes en la industria. Por otro lado, algunas compañías han implementado algunas medidas y han recibido buenos resultados. Desde la perspectiva regulatoria, tenemos que tomar en cuenta algunos puntos que se han llevado a cabo, por ejemplo, como en el Reino Unido, y algunas compañías que tienen un dividendo diferente, otros ofrecen medidas temporales y sabemos que algunas están generando nuevos productos. Estas respuestas regulatorias, gracias. Fernando, ¿cuáles son las prioridades que las compañías aseguradoras deben considerar para que puedan servir mejor a los asegurados? Tenemos que conocer las necesidades de los clientes, tener flexibilidad y prontitud para adaptarnos. Habiendo dicho esto, tenemos que considerar que se ha hecho un buen trabajo en la industria aseguradora. El riesgo sabemos que ha sido significativo. Gente trabajando desde casa, la necesidad de implementar algunos controles importantes antifraude y se están pagando las reclamaciones aun cuando tenemos
the survey, and we found in the region, and we found that most of companies that had a pandemic exclusion removed that. So essentially, they are paying claims that were not covered by the pandemic. And that's a very good response. From the point of view of health insurance, for example, the industry is doing very well serving the clients and also preparing themselves for the pent-up demand that is expected for next year. So we see that the industry is behaving very, very well. But of course that policyholders may need more. Some of them may have financial needs, but still need coverage. Some need less coverage or different coverage. And in this way, we think that also education is important because people are beginning to see, to recognize their need for the risk, for example, typical of working from home or cyber risks. And probably they don't know yet how the insurance sector may help them.
Thanks, Fernando. This question is for Neal. How have senior insurance executives responded tactically and strategically to the pandemic?
Thank you, Jose. And first off, I just want to thank you for having us. It's quite an honor to be part of this panel and with such esteemed colleagues. The first thing I'd like to point out is that we all know that the insurance industry, by and large, did not necessarily enter this pandemic in perfect conditions. We've had lots of challenges in the industry worldwide in different kinds of guises and different kinds of markets. We've struggled to meet our clients' demands and fulfill the digital divide and all sorts of things that, the industry has struggled by and large to find continuous profitable growth. So with that in mind, I think the industry and our executives have responded very well. I think we should be genuinely proud overall as to the end-to-end response of the industry. As some of my colleagues have pointed out, the operational response was went surprisingly well. I think most executives were pleasantly surprised how well their organizations responded to the first, initial periods of lockdown and how quickly they could get their organizations to shift to basically operating end-to-end in a completely new mode, right? So I think genuinely speaking from a tactical perspective, there's a lot to be proud of as an industry, and I will tell you that, and I'm sure my colleagues feel the same. Genuinely, most of the senior executives that we spend time with across the globe have a similar kind of mindset to the situation, in that they are absolutely wary like they're cautious, they're being deliberate, they're being considered around how they're leading their marketplaces and their organizations. But at the same time, they're resolute. They're very determined to do the right thing. They're very determined to play a positive role and a reinforcing role in their societies and their communities. And they're genuinely guiding their organizations from this perspective of we are cautious and, as I said, wary and mindful of our obligations, but at the same time this is an opportunity for us as an organization and as an industry to stand up and show some leadership in our communities and our society. So I think, genuinely speaking, both tactically, near term, and from a strategic lens, I think the response has been very strong.
Thanks, Neal. Duncan, given the ongoing of pandemic or the possibility of a new wave of infections, how must the insurance companies be prepared from a financial perspective?
Thanks, Jesus, and definitely echo Neal's comments about how well I think the industry did respond to the first wave of the pandemic. So my background's in the life industry, so most of my comments are going to be from that perspective. I think I'll start by saying that what life companies saw was actually fairly low additional claim activity. So the additional life claims from the pandemic were well within what companies could tolerate. Where companies suffered significantly was economically. So with the equity market crash, very low interest rates in low countries and depressed levels of sales for several months. I think those were the real issues. In terms of looking forward to a potential new wave of the pandemic, I think what we're seeing companies do is a lot more robust stress testing. So looking at, I think previously companies would look at mortality alone, but not necessarily combined with economic impacts. So I think we're going to see a lot more of that going forward. Certainly life claims could increase if there are new waves of the pandemic. So most life companies are looking at their reinsurance programs and also looking at anti-selection risks. So they want to be careful of potentially policyholders anti-selecting by taking out policies for higher risk groups. Final comment I make is that I think companies are reviewing their asset portfolios. So we definitely saw during the pandemic that certain sectors of the market were harder hit than other sectors. So we're definitely seeing companies looking at their asset portfolios and trying to reduce the exposure to some of the sectors that are the most exposed to a pandemic.
Thank you for your thoughts, your opinions, or these topics were very, very interesting to hear. The second section is implication of the COVID-19 in the insurance operation. Fernando, what impact are you expecting in insurance as a consequence of COVID in Latin America? And which is the growth expectation for the emerging markets in the short, medium, and long term?
Okay, thank you, Jesús. The industry in general terms is doing very well in the region. Of course, that it helps that, for example, business interruption is not a coverage that has been so expanded in our region as compared to others. Now, for next year, if the virus reduces its effect, as we always hope, we expect next year to be the recovery phase. I mean, even in some markets, we see that there is some expectation to have growth even compared to 2019 numbers. But we don't think that that's really probably a scenario that should be considered as an average. I mean, this depends on the country and on the type of insurance. For example, maybe that those insurance that are more related to credits or to consumption, since there is a pent-up demand there could have good news. Also, there is some expectation that COVID may bring more consciousness in customers on risk and then increase demands. Another aspect is that P&C rates may be going up as a consequence of the market hardening from the reinsurance side. But anyway, what we think is that 2021 will be a very challenging year, because we have to bear in mind that, especially in the P&C side, part of the problems that had to do with volume of premiums were, on the other side, compensated with a reduction in losses. But when we look at what will happen next year, losses will come back and premiums volume probably not that much. I mean, there will be still sectors of activity that will be facing problems from the side of customers. Also, to recover rates that have been reduced during this year will not be as easy and so fast. And that in an environment where those companies that are bringing like disruptive policies will be trying to enter the market. It will be an opportunity for them. In the life side, we'll know that the reduction of interest rates is also very, very challenging. And we also suggest to take a look, to keep an eye on inflation, because we all know that finally the fiscal deficits related to COVID may have some effect. Now, having said this, in the long run, we continue to be optimistic about the emerging markets and in the growth that may come from that.
Thanks, Fernando. These questions are for Keith. Which will be the effects of the fall of GDP for the insurance industry? And in the face of the economic recession, what is the perspective for insurance sector? What is the outlook for ratings in the insurance industry? What would be the behavior by region and in Mexico?
Thank you. And maybe just for sake of context, Fitch is forecasting global GDP to decline by 4.4% in 2020. And if we look at Mexico in particular, we're expecting a full year decline of about 10.8%. Also, we're not looking for a V-shaped recovery, but instead expect, depending on the market, that recoveries back to pre-COVID levels of GDP could take anywhere from 18 to 30 months. Now, for insurance companies, drops in GDP can pressure the industry in several ways. First is that, as we all know, the demand for a number of products correlates with economic activity. So I think we need to expect downward pressure on premium volumes, and that'll in turn pressure expense ratios and earnings. Second, certain types of policies, such as D&O coverage, oftentimes experience higher claim frequencies during periods of economic weakness. Third, also during periods of economic weakness, asset quality typically deteriorates. So we're certainly expecting an uptick, for example, in bond defaults in certain industries such as leisure and travel, commercial real estate, and certain oil-based industries. And also, and this is a phenomenon more in emerging markets, and we saw this in Mexico, economic pressure can result in downgrades of sovereigns. And a lot of companies in emerging markets invest very heavily in the debt of their sovereigns, so the sovereign downgrade can translate into pressure on the insurance companies. And given all these various pressures, our fundamental outlook for essentially all insurance markets and sectors was moved to negative in late March, and we continue to hold that view. And we believe life insurers who have the most exposure to asset risk will feel the most pressure.
Thanks, Keith. Difficult situation. Neal, what has been the impact of the pandemic in the life and non-life insurance operations, and how can insurance companies capitalize from this situation?
Yeah, it's a great question, and the first thing I would say is, from a context perspective, most of the insurers that I deal with personally are sort of the largest sort of global or international insurers, and it's kind of interesting because they, of course, are dealing with a situation of complete asymmetry. In other words, pretty much they know how to move to a work at home mode or a remote operating mode. But the reality is what's happening now all over the world is obviously the pandemic is at different stages and different phases. We've had countries in Asia with the first starts of perhaps a second wave. So they're dealing with these situations where there's asymmetry and complexity in how they need to run their operations, right? And so the first thing that I would say is how they're, the first term that comes to mind is hyper resilience, right? The reality is what our global insurers are learning how to master right now is how to operate across multiple landscapes that are experiencing different operational modality and being able to swap and change out and learning and experiences across those different areas. So they're learning what I would call hyper resilience, how to apply that across their enterprise, right? So that's the first thing that I would offer from an operational perspective. Extreme complexity balanced out by hyper resilience, right? The next thing, of course, is just one simple word: digital, right? I think nearly all of the industry going into the COVID environment had great ambitions around, let's call it, digitizing the operating model, creating more agility, flexibility, and optionality around how we serve clients, how we create products, all those kinds of good things. And so what I think has happened or is happening and will continue to happen throughout this phase is that the efforts around accelerating not just the mastery of digitization across the operating model, but actually the scaling that has really come to the forefront and will continue to come to the forefront. So it's those two dimensions around having to deal with, asymmetry across the enterprise and how things are happening, what the needs and requirements are, and filling that by really accelerating efforts and investment and knowledge and experience and capability around digital transformation right across the operating model.
Thanks, Neal. I totally agree with you. Duncan, after COVID, how do you think life coverages should be modified or amended to provide better protection to policyholders?
Yeah, great question, Jesus. I think fundamentally the basic need for life insurance remains as it has always been there, and we did actually see life companies pay out on many policies during the pandemic. Companies obviously want to continue offering coverage, but they need to do it in a way that they can manage their own risks and ultimately make a profit, of course, as well. Some of the things we've seen companies doing so far, they've been reducing maximum issue ages to reduce exposure to the older ages, and also maximum coverage amounts in some cases have been reduced. For products where there is investment return to the policyholders, we've seen reductions to the credited rates and also, because of the low level of interest rates, reductions to the guaranteed interest rates in policies. I think one area where we may see companies innovate is where life insurance is used as an investment vehicle. And what I mean by that is that we've seen during the pandemic that there's a lot of economic loss. People lose jobs, people get the virus and get sick and need funds to cover that. So I can foresee life policies being designed where they give access to part of the funds in those types of circumstances. I think that's one area where we'll see companies innovate. We're also seeing a lot of change on the underwriting side. So obviously things going online as much as possible. We're seeing remote screening services and tele-interviews take the place of traditional medical underwriting. And I think above all else, maybe given that life insurance is sold mostly via agents, training is going to be very key going forward. So we've got to re-equip the agents so they can operate and sell life insurance in this new environment.
Thanks, Duncan. That was the last question of the second section. It's important to know expectation for growth in the sector, rating in the insurance sector, and the impact in coverage and insurance operation. The third section is question from the audience. Neal, looking forward into the future, how are the global insurers preparing for the new normal?
Okay, it's a great question. I might just start off with a little bit of a story. I mean, I think everybody in this audience is familiar with the efforts that Lloyd's is going through around the future at Lloyd's at the moment. So you think about the most traditional heart and epicenter of the origination of insurance, the Lloyd's marketplace, with lots of tradition and lots of inertia around change. And just think as what has happened in the last 6 months is they have gone from people saying you couldn't possibly underwrite and write policies in the marketplace and do it remotely to actually having a great uplift in writing policies remotely, right? Surprising all the syndicate members and everyone that participates in the marketplace. You know, the second thing is they just launched their virtual trading room earlier this week. So you think about it, the most traditional heart of the industry has fundamentally shifted how they do business in what is, in historical terms, a nanosecond, comparatively speaking. And I think that's a great representation of what we're going to see more of happening. So I might sort of share with you sort of 6 or 8 common things that we're seeing from an industry perspective around the immediate future. The first one is amplification of this concept of simplify and build transparency into everything that we do. We know that we have to reinforce and engender trust. What comes with that is simplicity and transparency. So a real heavy emphasis around engineering that to the nth degree into our business. The second thing, as I would say, is undoubtedly consumer sentiment has changed and is being shaped by the COVID environment. And ultimately, depending on which country we're in, which markets we play in, which ranges of products we deal with, it will change, right? How it changes is yet to be determined. It's in flux. But I think what we're seeing is this emergence of right now, trying to get on top of that, trying to understand how sentiment is changing and trying to anticipate that in advance so that the insurer can thrive. The third area that I'd say is, and one of my colleagues touched on it earlier, is what I would call underwriting excellence. In an environment where we can no longer rely on investment returns to help shore up our profitability as we have in the past, it's really important that everything possible happens with respect to ensuring the fidelity of the underwriting product process, irrespective of what the business in, the line of business is. So things like artificial intelligence, et cetera, we're seeing a rapid increase in adoption of those type of things to build that into the operating model. And the final thing I'd offer is what I call ESG plus. So we all know that in the business community post-COVID, we have this rapidly emerging theme of environment, sustainability, and governance, like the do-good company. And without a doubt, we're seeing an increase around that as a result of COVID. But I really think the trend that we're seeing in the near term of how insurers are trying to really deal with this is what I call ESG plus, is this hyper-intensive focus around how we as an insurer are being seen to not just do the right thing, but leading in doing the right things. I think we'd all agree that insurers have a more complex role than a normal organization with respect to that. So they're sort of the 4 or 5 key things that I would call out as common trends that we're seeing the global insurers focus on in the near term.
Thanks, Neal. Keith, how can the government and the insurance industry partner to protect society in the long term against future emerging risks? And is insurance for business interruption due to the pandemic viable and sustainable?
Thank you. And I would say maybe starting on the business interruption side, our view is that business interruption really can't be offered in any material way if it includes pandemic risk. And here I'm talking from a developed market perspective where BI is a very significant product offering. And our thinking is just that non-life insurance only really works if risks are not highly correlated And for example, for property cat, you can manage correlations via geographic diversity, but for a global pandemic, it's just too hard to mitigate those correlations. Now, that doesn't mean we don't think a limited amount of pandemic BI coverage, can't be offered, but it would likely have to be at modest sublimits of the general property policy. But anything that would cover typical BI full limits over extended periods would just be way too much exposure and certainly have a significant negative from a credit rating perspective. Now, that said, if society decides businesses should have such coverage, it does appear that ultimately the government would need to be involved in the funding. Thus, we wouldn't be surprised if we saw plans develop in which the insurance industry did offer BI coverage without pandemic exclusion, but where the pandemic risk was reinsured into a government pool. Alternatively, insurers may not be involved in the pandemic BI portion, but government policies are arranged directly by brokers' policyholders. And we expect details and approaches would likely differ by market. And just as a point of comparison, there were similar arrangements that emerged after the 9/11 terrorist attacks. So we think there is some precedent.
Thanks, Keith. This question is for Duncan. In the new reality, what are the new insurance opportunities in the short, medium, and long term?
Okay, in the short term, I think there's certainly an opportunity around awareness. So what the pandemic has highlighted is the need for insurance, and I think the general public are a lot more aware of insurance and the need for insurance. So I think the industry can certainly capitalize on that and develop programs that can help companies and individuals manage their risks. So that would be one. In the medium term, I think there's definitely an urgency, as I alluded to a few minutes ago, in changing the sales processes, making things online, meetings virtual, etc. I think the companies that get that right are going to have a significant competitive advantage. So doing that quickly and doing it right is going to, I think, lead to some companies being a lot more successful than others. In the longer term, certainly things like I mentioned on the life side with savings products that potentially provide access to funds in the event of a pandemic. I think that could be a development. And then, as Keith alluded to a second ago, I think there's opportunities for the insurance industry to partner with governments to provide more complete coverage in future pandemics than we've seen perhaps in this pandemic.
Thanks, Duncan. Fernando, faced with the changing needs of insurance customers, how should the insurer adapt?
Okay, thank you, Jesús. I think there has been consensus here in the panel that to adapt products and processes to the demand of customers, to making simple underwriting and also expedite claims processes are key. Now, what I would like to talk is about data, the role of data here, because we all know that this means technology in general terms, making things simpler. But here the question is how to do that without taking an unacceptable risk for insurers, how to do less questions in underwriting, how to simplify fraud detection processes. And here clearly the answer is analytics, is business intelligence, is artificial intelligence. But what I would like to point out is that this is not just a matter of software and mathematical models. In essence, it's a problem of data. And for example, let's see some examples. In the automobile insurance, for example, there is a trend to move from the scoring systems to telematics, or taking data from the mobile phones, for example. And that's very interesting because it means less questions, but also more accurate estimate of the risk of each driver, because you detect exactly how the driver behaves. Also, for example, to take another example that has been here commented in the panel, the underwriting in the life side, for example, that those cases were thanks to the authorization of the potential customer, the company may get access to the drug prescription history of that person from databases, from pharmacies. And so those are two very good examples of how the business model can be built from a very good data access out of what is being asked to policyholders. And so what we think is that, in essence, those companies who are able in the future to collect data and make good use of it will have an advantage and serve policyholders better.
Thank you, Fernando. During these last few minutes, I'd like to ask for a final thought from each panelist. Let's start from Neal.
Thank you. And again, I really appreciate you being here, and I certainly enjoyed listening to my colleagues and the conversation around the industry. So my final thought is this. The industry, as I've alluded to, has a real opportunity to stand up and show leadership right now. I think the players in their marketplaces that will thrive are those that will stand up and show that kind of leadership, be a little bit more bold than they're used to, being a lot more customer centric than they might have been in the past, and being prepared to take risks around innovation, because I think they have the permission to do that if they do the first two things. I believe that when we get to the end of this horrendous period of time, that the industry will be stronger and more resilient going forward. And it might be, we might look back historically and see this as the renaissance of the next phase of evolution of the industry. And so I don't mean that lightly, I sincerely mean that. And I would sort of encourage all the people that are listening to this is to, you know, when you get back to work and you get back to your office and you're interacting with your colleagues, look at this as a moment to shine and a moment to show leadership. And really dig in and work for your customers and work for your communities and work for all your other stakeholders. So again, thank you for having us. It's been a great panel, and I wish you all the best for the balance of the conference.
Thanks, Neal. Let's hear from Keith.
Thank you. And again, I want to express my appreciation for the invitation to participate on the panel. It's been a lot of fun, very, very informative for me. And I, appreciate being able to share some of the views of myself on behalf of Fitch Ratings. And we at Fitch, we've placed a high priority on assessing COVID-19. And our goal is to make sure that our methodologies and analytical perspectives keep focused on the key issues as they rapidly evolve. So hopefully by participating in conferences like this, we again can learn and hear perspectives that help us, do that, because our main job as a rating agency is we're a third-party observer, and to the extent we can shed some light on aspects of how things are evolving, I think we're best doing our jobs. As I mentioned too, we think the insurance industry will weather the storm reasonably well, but we also aren't out of the woods yet. So we're going to do our best to keep everyone updated on our thinking, whether it's via individual rating announcements on companies, special reports and commentary, and participating in events such as this. We're also going to take a hard look at the assumptions that we're using in our stress test analysis. And we're going to keep the market informed as those are updated, because certainly we think there will be a need in the coming months to update some of those if we learn more and if we need to fine tune how we're assessing risk in the industry. And last but not least, just want to stress to anyone, feel free to reach out to myself or our analysts and keep an informative dialogue going. Because like I said, it's through dialogue and discussion that we all learn, and I think come out of this better, as was just alluded to. So again, thank you, and Appreciate the presentation.
Thanks, Keith. Let's hear from Duncan.
Thanks, Jesus, and definitely appreciate the opportunity to be part of the panel today. I think, as we said at the start, the insurance industry has performed very well over the last 6 to 9 months. I'm being pleasantly impressed by how well the industry's performed. There's certainly an opportunity to take advantage of the awareness that we've generated in the market to basically increase the amount of business we're writing, and I think also to explore new markets. We can use this as a kind of springboard to doing that. One thing I think is going to be important is innovation and agility. So there will be a lot of advantage for companies to develop new products, but they're going to need to be innovative. They're going to need to be agile to respond to the needs of the market. But I think the companies that can do that best are going to have a lot of success over the next few years.
Thanks, Duncan. At the end, Fernando.
Okay, thank you. It's really a privilege to be able to be in this panel, especially for Mexico. And my thoughts are that this is like a recalculating period for insurers. I mean, there are short-term effects of COVID and long-term. What we see in the long term is basically the acceleration of pre-existing trends, because we're talking about digitalization or reduction of interest rates, but the speed is different. Now, what we see is that everything changes. I mean, we're talking about changing products, about the change in the relationship with the policyholders. We are talking about the volume of sales that is a less predictable number now. Regarding the assets, the financial strategy needs reviewing. Even on the liability side, reserving methodologies need review in this scenario because, for example, the reporting pattern is changing. Even the evolution of risk of a single policy during its period is changing. So I would say everything is changing. And is that a consequence of COVID? In short term, yes. In the long run, probably not. But the fact is that insurers need to react now. And another thought, in the positive way, I would say, is that this has been and is being a period of extreme uncertainty for all the world. And we are in the sector that takes risk by definition. I mean, risk is our home. And we are not talking in this conference about insolvency. We are talking about how to better address policyholders' needs. That's a very good sign. So thank you very much, Jesus.
Thank you, Fernando. To wrap up, I'd like to share my conclusions on this discussion. In my opinion, the response of the global insurance industry in the face of the COVID crisis has been the expected and accurate one. Technology has played an important role, and as such, we will experience a rapid increase in the use of digital tools. The large decreases in GDP and the economic recession will impact the growth in the insurance sector. This effect can be even more significant in emerging markets. This is the moment for governments and the insurance industry to come together to protect society, particularly in regions like Latin America. In this new reality, there are new opportunities for the insurance sector in emerging markets in particular. There is a great opportunity to increase insurance penetration through life and health insurance or pay-per-use insurance, for example. The insurance sector in every country is playing and will continue to play a key role in resolving the pandemic. I want to thank the panelists and the participants for sharing their insights. With this, The panel is concluded. Have a wonderful day. Bye.